Hey everybody, how's everybody doing today? So again, thank you for all the emails. Keep them coming. I do see them all, so great to have you all trying to find about the new venture that's coming soon. So just email me at tradingwithjasmine@gmail.com. Very excited to get into all that. Things that we cannot cover here. Many things that we can get into. So excellent that you are trying to email and get in. So before we get started with today, I was just thinking something. I was thinking Apple, if you have a new idea for the Apple iPhone, which is, all right, so I don't know how long we have to wear masks in New Jersey, but my phone does not recognize me anymore. So it's really a pain to have to enter my code every single time. So if there's a way that you can create something that's a different recognition, that would be great. All right, that's a little side note, but let's get on with today. All right, so for today, so you can see that equity markets are showing strength across the globe as prices have continued to rally from our demand zone. So hopefully those of you are long from our demand zone yesterday and are continuing to take profits. But today will be a different day because we are getting closer to supply. So the longs close to supply are going to be not as high probability trades. So just on a caution for coming into today. Dollar, I believe, is still very much range bound ahead of the FOMC and ECB on Wednesday and Thursday. All right. Let us take a look at the long. So you can see here, so originally we had a short coming in, but then we had a long also that was fairly close to current prices. So if you remember yesterday, we had also a pretty bullish day, but we weren't quite near the upper supply zones in the equity markets. So just out of curiosity, if you got in either took the short and took some profit on the short side or got in long and are still holding on to it, if you want to put in, if you have done either, or if you're still holding on to one, or if you took profit before the end of the day yesterday, that is fine too. Just if you want to write it in and let us know. But you can see that the setup coming into yesterday's session on the long side, today, you can see we did start to break the highs yesterday, but you can see a continued rally overnight as we have continued to move higher. And so what is the next move here? And as we take a look at the last slide, what we do see is that we are nearing some supply in a couple of markets, Russell, the Nasdaq, the S&P, not quite as close at the moment to the S&P and the Nasdaq, but we are getting very close to there. So if any of you ever experience continuing to try to go with the movement to the upside while we're nearing some sort of supply, it does become a very difficult type of play. All right, so let us move into the charts. But, I do want to point out something with, overall the supply and demand strategy and trying to keep it as simple as possible. I do remember when I started, a lot of focus was on indicators and trends and all. But, if you really think about it, where do we really want to get in, right? We want to get in where we have low risk, high probability trades. So the problem with indicators is it's lagging. Trends is also lagging. You know, if you take a look at things, a lot of times I couldn't even find where the trade was, and it really wasn't until Sam Seiden came on and became at that time an instructor and brought in the pure supply and demand strategy, where I actually was able to see where supply was, where demand was, and said, well, hey, this is where I can get in long, this is where I can get in short, and that's what creates these opportunities for us to get in on. And think about it too, if you really think about trends, right? If you think about trend, I mean, I hate to take examples of, but just something that we can think of in real term. And for right now, let's think of something such as toilet paper, right? You have something such as toilet paper, say for instance, it's $30 right now. Let me wait for confirmation to see if somebody else wants it so I can buy it at $32, right? That's one thing. So another thing is, well, let me see, it drops back to $24, but nobody's buying it, so I don't want to buy it either. So, okay, then it drops back to $20. Well, do you want to buy it? Or $16? Do you want to buy it? Well, no, I don't want to buy it because I think the trend has changed. So I don't want to buy it at $16, even though I was willing to buy it at $30. But now because the trend has changed, and I think it's going to go even lower, so I don't want to buy it. So if you think of it that way, in terms of what you're buying and selling every day, it doesn't quite make sense, and that's not what we want to do when we come into the pure supply and demand strategy. So let's go into the charts. Okay, so I thought what we do today is start a little bit differently, and let's go alongside of the going around the world. So like I like to do is take a look at what's been going around the world and start off with the Asia session, and that's why we are going to start off with the Nikkei today. So you can see that we have continued to rally. We did break out of the tops, and now what we're nearing up into is, let's take a look here. All right. Okay, so we have a couple of supply zones up above current price. The closest one right now is going to be at this 24.95 to 26.95. And you can see some demand. Now, the first you want to do thing is a little bit lower here, but you can see this area right here is going to be coming in at 19,764 to 19,720. So this is the first market as we start into the Asia session that starts to come in throughout the night. So this is after we close inside of the U.S. market. We move into Asia, and at the same time, you're going to move into the yen, because that's going to be coming in at the same time as well. The yen has finally come in and hit our 240 demand zone. Right? So you can see it took some time. It did come in once before, but you can see it just touched the level. That's why we still kept the level in there. We did touch it again now, and you can see we have slowly started to climb up. But as we can come up now, it's going to be a retested zone up above at the 94.10 to 94.67. So the area that really hasn't been touched is really much higher. That's coming in at 97.63 to 98.12. So the opposite picture is going to be into the dollar yen. And with the dollar yen, what we see is, start off with the weekly. The weekly, we have some supply. So this isn't in a particularly great area, but I do like it above the previous highs, which is coming at 112.58 to 114. And the closer supplies we have, you can see that as it continued to drop overnight to 107.18, 107.28, and then the above area is a retested area on the 107.65 to 107.73. All right, and I'm going in this order. I'm just taking around the world at the moment. So we started with Asia. Now we're going to move into the European session. We're going to move into the DAX. All right, so moving on into the DAX. So you can see with the DAX also showing strength. So you can see Asia showed strength, the DAX showed strength. Two markets, Asia, Europe coming in. We are retesting back into our same 30-minute zone. So it bounced around. It came all the way down. Now it came all the way back up. And you can see that we're right back up in there. The next area you can see is going to be by the gap. That's going to be coming in at 11,603 to 11,719. And the fresh demand is still lower at the 10,047 to 9989. And let me just see one more, which is going to be the 240. So the 240, what you have here is that area that I was telling you on the 60, it is inside of here because you can see on the 240 that you are going to fill the gap with another level right up on top of it. So that can be a pretty expensive market. So just you can use this area as a general area for as prices get back up into that zone. So as we move into the DAX, we also move into the pounds. So with the pound, this is what happened yesterday. We originally had a 30-minute zone where prices have moved down, but I said look out because we have dollar weakness and we have some close demands. So those of you, we hit into our first demand. As you can see, this area, if you did hold into it, so if you take a look at when it actually hit, right? So this is the area that we were looking at that was the opposing level. Okay, and we hit into it actually. If you take a look here at the time, this is still the U.S. session, right? Still the U.S. session. We still had some trouble getting through some close supply, and then you can see where we started to come back into the area again. So this is sometimes when people, you know, if you're trying to move stops into break even, and so, or you don't want to hold it overnight, this is what starts to happen is more than likely you get taken out. But you can see really this is the trading time of this is when you get the move of this market, which is the pound when the DAX and the European markets open. So you can see the moves that happen once this starts to take off. So this time period, you can see this is almost like a pre-market. Well, this is when the DAX starts, and then the pre-market of Europe, and then you can see that continuation of a move. The lower area is we also have at the 123.78, 123.68. Let's take a look at the higher supply now. So I didn't quite like a whole lot. You can see we've hit some, but I went above this zone a little bit higher, closer to the 127.37 to 127.73. Now we could very well see some kind of a fall down if we have a dollar hold at the moment, but since the dollar is not at any sort of great spot and the pound doesn't have anything too great down below, I'm kind of leaving it open to put in the higher areas and then wait to see if something is to develop inside of there. We do have a 15-minute supply, though, that is, let me see where that is. Inside of that area, that's, which I like, which is coming in at 126.79 to 127.25. So you can keep that on your radar just in case we do get some bigger movements coming in. Those numbers on the spot market, same thing. We had the same scenario where we had the 30-minute level, prices fell down, but then we had the opposing in terms of the movement in, so you can see. So if you take a look at these markets, especially that ones that have to do with the dollar, when we get into days such as tomorrow with the FOMC, with the ECB, the dollar is going to have more of its major move during the U.S. session, which a lot of times it does anyway because it is the dollar. So it is going to move more in the U.S. session and be a lot quieter overnight, right? But then you can see when these markets, they get going a little bit more on their own fundamentals, or the dollar too, because remember too what's happening. At this moment, what's happening is you're having a dollar weakness because of the equity strength. So if we're starting to say, well, economies are opening up and we're seeing lower infection rates and blah, blah, blah. And now all of a sudden, Asia's like, whoa, we got to get going. We got to continue. And Europe's going, well, we got to continue. And then all of a sudden you see a dollar start to move down overnight. So that's going to create another movement. And then, of course, added with the market, with the European traders. And so you can see all of that creates this sort of continuation move in these markets, right? So the only time I let I would say a rival affect me would be, if it's a high time of trading, like the first couple of hours of trading, and it's coming into an area and is creating a new opposing zone, then I would, let it affect me. But you can't, if you really take a look at, sometimes what it is it's hard for somebody to know when they're just starting out. But if you've been looking at markets for a while, trading for a while, what you'll notice is, things get quiet at certain times, right? You have noontime. So noontime here is, and then you have noontime in Asia. You have noontime. The quietest time is going to be your noontime in Asia, right? Because which is almost midnight on Eastern Standard Time, because really no other market is open then, right? You only have Asia, and then there's no other market open yet. So really that is like the quietest time in the whole 24 hours. But then you get into European time, and then European time, once their lunchtime comes, it's going to come a little bit before, right before the pre-market of the U.S. Open. So sometimes you'll get some traders out early already, but not the people going, well, these days you're not going to offices, but when you're going to offices, you're not going to get those traders in quite yet. So it's a little bit of a mixture with the European lunch. And then of course you get into the noon. That's when European markets close. So really U.S., but U.S. does make up quite a bit of volume too. So you take a look at those times, and then you take a look at the closing, right? The closing time moving into before Asia time. You have arrivals into those times. I don't really count those as much, just because you're quiet for a reason, right? You got to think about it that way. Arrival is just not pure and simple to say, oh, well, it's arriving like this, so I can't take it. It's more, it's arriving like this because of this, right? And that just comes from the time in the market and knowing, or people like me telling you, right? Showing you. So this area here is 1.2657, 1.2704. All right, so we've started to go around the globe, starting with the Asian market into the German market, now coming into our U.S. market here. All right, so let's go take a look at the S&P. The S&P, we are at 2906. So let's go take a look. And you know, with all of this, I do have to stress, you know, I didn't know any, you know, when I first started it was just stocks. So when you start with just stocks, you think that's it. The market's only open from 9:30 till 4 o'clock on Eastern Standard Time, and nothing else exists in the whole world except, you know, Apple and Netflix and Caterpillar or something like that. So you don't think anything else exists. But then once I started getting into the Forex market, you know, that particularly opened my eyes. I'm like, whoa, you know, this isn't the only market here. We're affected by the whole world. You know, this isn't just us. You know, you look at the bond market. Who really started it? You know, was the FGBL. You know, the Bobble and the Bund. You know, they're the ones that started some moves pretty big to the upside and pretty big to the downside. You know, and so are we really the first one? Sometimes this, you know, Nikkei, right? The first ones to be infected over in Asia, so they're the first ones to be affected on the downside too. So it depends on what's going on in the world. That's going to tell you, give you little clues, and that's a lot of what we do and what we're, you know, have gotten better and better at through the years is just, you know, trying to filter out the good and the bad, you know, what to come in and look for each day, what not to look for each day, what to ignore at times, right? That's just as important too, because then you get too much noise going on. All right, so for the S&P, we are getting closer, but not quite there yet. Our upper level still coming in at 30.002 to 30.034 to 30.81. And even though I do see so you can see right here, right? So we still have these lower demands down below. These are the overnight levels. We went through this yesterday, and then we have down below yesterday's lows. That's really coming in closer to the 2808. And the reason why I didn't put in these upper ones, and actually yesterday we also during this little area here, I'll also try to get long for the day as well. But you can see here now, right? You're going to have this area and you're going to have this area. And they could very well work. I just don't like them as we start to, say, for instance, we do hit up into those upper supply zones. You know, these are going to be pretty high up. But you can see that these have formed after breaking yesterday's high. Our overnight high is still being made at the current moment. We still have over an hour to go yet. So our overnight high is still being created at the moment. Our overnight low right now is coming in at the 28.51. Okay, so the Nasdaq, this is the area we were looking at. So we had a 10-minute area where it hits early on in the day, came down into our demand zone. And you can see this is what happens, right? It just misses in the U.S. session, but then starts to hit in the overnight session. So you can see the overnight session is the one that takes it. And actually, you know, couple of things here, right? If you really think about it, if you really say, well, this is overnight level. This is arrival and all. But if you just put in the area, you wouldn't even think about it, right? Because more than likely you're not even watching it at that time. So that's the beauty of it, where you don't do too much micromanaging and things just work out for you. And if you take a look at yesterday's action, we knew we had, not that some kind of weakness coming in, but we had a very strong Russell, and we had a very strong Dow, right? If you take a look at those things, right? Really, it wasn't a massive, in terms of, you can see a drop. We try to pull back, we drop, pull back. So it wasn't like just a right move down. And now we are continuing to move up from the area, nearing a 4-hour zone that's still just a little bit higher, not too close, but it can get there pretty quickly at the 90.68 to 92.31. Now, the other thing I do want to mention too is, if you take a look at, we didn't take a look at the SPY yet, so let's go take a look at the SPY. So think of it too, right? If you think, So think of it too with the SPY, what the sectors that can make up it. So for the SPY, you have a much more broader, right? You have consumer staples, consumer discretionary, technology, healthcare, utilities, materials, energy, financials, real estate. So you have all these sectors that make up for. So it is going to be more of a general market move up that's going to take the SPY stronger. So now that we have 60-minute supply and demand. Do I have it here? No, I have it here, I believe. Okay, so you can see that ES zone with the SPY is going to be coming in at the 300 to the 308. Down below, we do have a couple of 5-minute levels that we never hit yet. That's coming in at 281 down to the 280. And of course, you have the 30-minute that's even lower on the SPY. Okay, at 260 and 257. And for the Qs, right, very similar to that of the Nasdaq. You can see a little bit higher. We have it at 220.97, 224.79. And on the 5-minute, you can see we have it at the 211.50 to 210.60. All right, and then we're good on that. All right, so now the strong market. Now take a look at the RTY. RTY is actually taking out its 4-hour zone. And let's think about too what comprises the small caps, right? So remember yesterday I said the small caps are the ones that's going to a lot of times show you the strength in the market, because they're the ones that typically show you the strength or show you the weakness, because they are the ones that can lag but then really start to take off. And so yesterday you can see very, very little retracement and a continuation move. So that market is on a move higher now. And you can see what sectors do we have inside of there. We have the main ones are going to be healthcare, industrials. So healthcare makes up about 21%. So if you really think about what's going on, healthcare is the one that's kind of leading the pack, because everybody's trying to formulate a vaccine, right? So everybody's trying to, I'm going to be the first one to get the vaccine out and this and that. So there's so many trials going on, so many things going on. So healthcare is just taking off, and on top of all the everything that's needed lately, and everybody's trying to make those too as well. So that industry is taken off, and that makes up 21% of the Russell. And then you have the industrials, which is about 16%, technology about 14, and then the financials 15. So when you see strength in those sectors moving, you're going to have a big move inside of the small caps when that comes in. So right now, you can see we're already up to 13.15. Let's take a little bit look on the daily. Now we are nearing this overall area, so let's go take a look on the 60, what we've got here. All right, so still making overnight high. It's still climbing. Now, let's see. So you can see overall, let me just see here. Where is the overnight high? 13. All right, so we're way up above even the 50 now. You can see there's nothing up here that's too great. Russell's an interesting market. There is nothing great, right? Nothing really fresh, nothing interesting. Yeah, nothing, you can see nothing's really fresh, so you get much higher on the Russell. So that is interesting thought here. Almost up high. Yeah, this market, if you wanted to short any market, at this moment, I wouldn't say it would be this one, just because there's nothing in the middle here. I don't see anything of quality in the middle here. Yeah. I mean, it held for this for a little bit, and then we went to shoot up, and we've continued to. We haven't, and then this more likely is going to become a little demand here at the 1250 as well. Right. And you are going to have a pretty big gap. Let's see, 13, 14, yeah, so it's at 1276, so 13, 14, you can see you're going to have right now about a 20 point gap. All right, let's move on into the Dow. All right, let's move into the Dow. So let's think about too what comprises the Dow. The Dow, you can see, has components such as, so industrials are going to make up your highest percentage, about 22%. Those the main one coming out of that's going to be Caterpillar, right? Technology, approximately 17%. Main one's going to be like IBM. Consumer services, about 14%. You have the McDonald's. Oil and gas, about 11%. That's going to be Chevron and Exxon. And then consumer goods, about 10%, which is like Coca-Cola, Procter & Gamble, and of course additional. So the only difference is, well, you have 500 in S&P, 30 in the Dow. So that can also be a mover too, if certain stocks, right? If certain stocks, such as, say, for instance, Caterpillar takes a hit or something like that, then all of a sudden, either way, it can move in either direction pretty quickly. So the Dow too now is gaining a little bit of speed too. We have fallen from, actually came pretty close to hitting our demand too inside of the Dow. You can see right here, prices Yeah, that was yesterday, actually. Yeah, that was yesterday. Yeah, so you can see it falling back, and then we continue to rally now from the area. And now, let me see. 6 units supply. All right, now let's see what we have up above. And the reason why I gave you the sectors with the stocks, because it is a good thing once we start the open, if you want to take a look at just a general glance. So you can see on a green day, everything, right? Everything. Green, 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 green. Green, 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 green. You're like, wow. Even energy, right? Even the overall sector is green. The only thing you're having a little bit of red in is materials, right? So that's about it. But it is something, if you want to pay attention to whether you're doing the small caps or the Dow or the S&P, you do want to pay attention to your different sectors. And we'll go take a look at that too as well. All right, let me go back to the, I think I was doing that. All right, so the YM, you can see as we come up a little bit higher, we're going to be hitting into the, back to the 26,000 mark. So 26,083, 26,288, and you can see it, that the first one is an overnight mixed in with a day session one that goes up to 26,629, but generally inside of this, right above this 26,000 area. All right. So while we're on that subject of the ETFs, let us take a look a little bit to what we have with it. And the different colors just to see where it is on the pre-market, that's all. Actually, we can use that for that. We can change it back so that we don't get too confused here. So let me change it back. I'll change this back too as well. So we can look at the regular candles. All right, so let us take a look at all right, so you can see with the materials. All right, so we're pretty much gotten pretty far from the area, but also up above, you can see on the XLB, we do have an area coming in at the 54.64 to the 55.76. So that's on the XLB. On the energy sector, so it's still fairly strong given the whole situation that's going on. It's still holding up pretty well. And so you can see a couple of tested demand. So this area didn't test, but the only thing I'm seeing is I don't believe it's a completely fresh area, but this area is 32.19, 31.79. On the supply side, you do have two gaps that's coming up a little bit higher, 42.48 up to the 45.47. Financials. So financials, you can see we've been stuck inside of the zone for a while. Now we finally popped up about at the 2307 right now. So you can see that the higher area is going to be up at the gap also at 2503 to 2575. And The only reason why we're taking it outside of this overall range, mainly because we are nearing some kind of supplies, and these are the fresher demands a little bit lower. That's just getting you outside of the overall range. It's fine to take the range on the move up as you continue before you hit supply, but then you have to be careful on the way back down. All right, let's go to the industrials. Oh, not 30. And you can see too, a little bit higher too as well. We have 65.47, 66.97. So like I said, we are nearing in some of these markets in the next area of supplies. And then the last one we'll look at is going to be XLK, which is a bit of a 30-minute demand coming in at 87.79, 87.40. So like I said, you could use these either for your stocks or to what I just gave you for the breakdown. Wait, let me just see where we are with this so far. 90.80, yeah. So you can see right now we have a couple of areas. The first one is 91.20 to 93.15, and then the second one is 95.18, 97.43. And in this environment with everything that's going on, the ones that are going to really thrive in this environment is going to be the healthcare, consumer staples, consumer discretionary, because those are the ones that are, besides the, of course, all the online, those Netflix and all that, but all those markets are going to thrive inside this. But as we start to unravel and we start to, the whole thing is, well, if we're starting to let people out or slowly let people out, or is it going to be okay? And if so, then do we return to normal economy? And so that's always a question right now. But for right now, these are the sectors that are continuing to thrive. All right, so that's a look on the overall sectors of things. Now let's go into our commodities. Okay. So yesterday, we have to do bonds too. We'll do bonds. So yesterday, you can see what happened. We kind of bounced between these two areas here, right? So we had this lower area and this upper overnight, and we just bounced between the two, and then eventually went down and hit into this zone's been here for a little while. Like I said, it looked like it slightly touched a little bit, but now it really came down and touched it. I don't know if any of you were brave enough to try it. Did go in. OPEC a lot of times does like to make news. I don't know if anything came out, but that's, if you ever notice what time oil can really move, a lot of times it is around this 4 or 5 o'clock, 6 o'clock in the morning, because that is the time where if they are having some sort of meetings and all, it is going to be around that time. So you can see we had a very nice move out of this overall zone on the so nice little 5-minute area. We really don't have any other demand besides that inside of this market, because you can see we just went down, capitulated a bit, and then started to come back up again. We still have some overnight levels up above at 1540 to 1574 and 1650 to 1677. Right now, what's being held down is, if we go take a look at it on the on the 4-hour, this is what's going on. So you've came down and hit that demand, and then you've come up and hit this supply. So no matter what's going on in this and all, the footprints are in the charts, right? You get the footprints that come in. They tell you what exactly is going on. If a little bit of demand's in there, you have it. If some supply is still there, you still have it too as well. We're still quite a bit a ways from our upper 4-hour area. So right now there is still weakness, but the overall, you can see the oil, energy sector is not that weak. So even though, and a lot of people today are still calling for, just because of the storage situation, and but then everybody seems to know that at the current moment. But that's a lot of people started talking about the June contract now. So, but like I said, just continue to play it. I mean, if there's no other demand there, then leave it alone. If there, just continue to short it. If there starts to get new demand again, then sure. If it's low risk area and you want to try it, then go ahead and try it. But don't, force a demand if it's not there yet, right? So we've already hit into the demand. If you, took it to this opposing area, that's fine. If you took it and trying to, break even or this and that, that's fine too. Just know your place with it, and just play the charts as it, footprints will show up. All right. I skipped through the bonds, so let me go back to the bonds. Yeah, let's do the bonds. Okay, so with the bonds right now, this is what we have. In terms of, it did drop a bit overnight, but you can see we are starting to get a little bit of movement back in. The upper area you can see. So if we take a really good look at this, to me, it's not really showing a lot of strength yet. Some people might say, well, this is showing indecision. We're starting to slow down, and, perhaps, but, it really has not shown us a great deal. I think it's a little bit on weight too, as we come into tomorrow. But you can see it's still hanging on to pretty good upper, in terms of the up move. And now what we have is, even here, right, we're caught between these two areas, right? So these two areas is where we're caught between at the current moment. And in the bigger picture of things, this is the whole general area that we're still caught in. So that's the bigger picture of things. In the very near term, do you have a little bit of air? This one it barely touched into. You can see we're coming back up into that zone. And then down below, we also have these two, one retested area, one overnight area. That's a little bit lower down too as well. So that's what we have on the closer end of things. And for the U.S., did I do the U.S.? Let me see. U.S., we didn't quite get back down into the same. You can see we just touched this demand and left. That's still down at the 179.18, 179.10. And like I said, in between, it's really just ranging. I don't consider anything inside of here too great, just like the TY. The upper zone is still going to be your better zone on the 30-year. Let me just see if I did something with TLT. Yeah, so TLT, the one thing to watch out for just with that upper TY area. So also to match with that TY 240, I believe it's going to be at 169.68 to 170.84. All right, let's move into the dollar. So for the dollar, let's go into the dollar. So the dollar is going to be, well, we shall see. I don't know what they can really say, like I said, they're probably looking for, if there's going to be a change, if they're going to lighten up on things. Last month we saw pretty drastic measures, right? If you take a look at this whole move, this is all that's been happening. So to me, it's very range bound. It's not really showing us a whole lot at the current moment. So if we take any trades inside of here, just realize that it is going to be overall lower probability until we get out of this this overall range. If you really take a look at where we're coming from back in March, this is where Sam called the low inside of in the dollar, and we have continued to move, and you can see this, when a market like this moves in this fashion, there's usually a reason, that was when we had a big scare inside the market. Then we start to calm down with all of the stimulus packages and the other central banks and all. So we start to calm down a bit, and it could range for a while too. That could very well be, it could be a non-event coming into Wednesday and Thursday, because if they don't say a whole lot more, there's not a whole lot to be expected. So credit markets are one they're going to be looking at, and I guess if any sort of any sort of a change in what they're doing, that could be also too. So what we do see at the current moment inside of this range is we do see some supply right up above at the 134 to 150. And then some lower demand coming in. Oh wait, let me just see where lower. Still coming in 95.83. You do have this area. I didn't put it in mainly because it is an overnight area, but you can definitely watch out for it. It's just that it is an overnight, and for the dollar, overnight can be, sometimes the dollar can get really quiet. All right, so with that, let's move on to the euro. Okay, so for the euro, we still have a 15-minute demand at the current moment, which is down at 1077.88, 1077.05, and so I think the tough part about the euro is this. I can see weakness coming in from here still, but once we go up higher, it doesn't look like, to me, let me go to 60-minute. So you can see here we're all inside. So this area is going to be a retested one. I like this for a new pop above the previous high at the 100.44 to the 108.32. Then the upper zone is coming in 1109.8 to the 11143. Now down below too, I do want to take you down if now this will be for another, but you can see if we do come down further, really the next area below the previous 4-hour zone that we rallied off from is going to come down closer into this 105 region. So that's just something just to keep in mind. But like I said, I don't particularly want to be long up here just because we're kind of sitting in here. So this may not be the greatest because it's very low down, but I don't believe I want to particularly be long inside of here. So that's so currently where it's at, I don't myself want to be long there. But like I said, it could be waiting too as well. In terms of this number for the spot market is about 12 difference in terms of a number. It's going to be a little bit lower. So it's going to be in that 105 region, 105.60s region to the 105.30s region, I believe. Spot market, to me, looked a little bit more like the dollar, where it has that demand inside of the range there. So where we had the dollar supply inside that range, you also have some euro dollar spot market coming in at the 108.04 to the 107.84. And then, like I said, not a whole lot of fresh above where we're at right now, because where we're at right now is a little bit of a daily area. But you can see up above, it's really not until the 101.79 to the 111.65. The Aussie, to me, looks like a little bit like the stock market, where we are nearing this area here. So that's kind of to me, thinking like it's very much like the stock market, where we have Nasdaq, S&P nearing some kind of supply, and the Aussie also reaching some kind of supply. So you can see too, if get all of them lined up together, it could be nice that we have a move off of them when all the markets kind of line up together with it. Because remember, the dollar is going to be a little bit more of that risk off type of play. So the dollar starts to move down. Aussie, pound, all those start to move up. And let's take a look at that on the 240 of the spot market. Also, that's coming up a little bit higher, 65.49, 66.28. Alrighty. So that is good for today. Again, I just want to let you, if you liked it, hit the like button, hit the subscribe button if you want to see more. Follow me on my social media for the new venture coming soon. Continue to email me. I do see all the emails, so definitely continue. And it was great being here with all of you today. And have a great trading day. I will see you Thursday.